Good morning and welcome back to the YouTube channel of Old Bloke Crypto on February the 7th, 2024. We're nearly 2 hours past the daily close, and looking at this screenshot from TradingView, you'll see how our price has closed underneath the range high of 23.90 for Ethereum, as I marked out last week, with the range bottom being 21.31. So it's continuing in this clear range. Be very interesting to see. You just see the start of the daily candle there. It'll be very interesting to see what happens today and tomorrow as well. And these couple of days will be pivotal in the ongoing price action of Ethereum. As I said on Twitter today, price topped out for the day at 23.92, top of the range I previously marked out. Coincidence? No. And this is the thing. With technical analysis, if I can see the indicators, I can see where price is going. By those indicators, so can the market makers, or as I call them, the market manipulators. So we'll get into where I see price going accordingly. And earlier in the week, and I'll scroll down to that tweet, for accountability's sake, I said that I expected price to go to the downside first and fill at least 50% of this wick to the downside, which was at the bottom of that was 2044, and how the mid part of that wick was 21.27, virtually identical, 21.31. We haven't got there yet. We may still do, but we certainly didn't get there at the start of the week. So that opinion was invalidated, which is fine because, as I said, accountability, it's important to have that. And secondly, we're still maintaining within the range, so we could get there. So this is the live view on Bybit, and you'll see again here the EMAs that we're looking at, not doing much, and really can be largely disregarded at the moment because we're trading in a range. You see how they're compressing? Typical action within a range. They don't know what's going on. They're not breaking out to the upside or the downside. EMAs are very useful. I rely on them a lot, but during a range like this, not so much. We're looking at our range boundaries. Right. Okay, possibilities for today. We could reject and continue to the downside now. We could close above this 23.90 range boundary. If we do and close above it with a green candle, then tomorrow's candle becomes more pivotal, because we need to see an entire green candle above 23.90 to open and close above it for us to have a confidence that price is going to continue to the upside. And that doesn't mean it necessarily is, but that's confidence. And when we have that confidence, we can then choose to place additions to our high time frame long, for example. But if we get close today above and then a close tomorrow below, we would sit on our hands and do nothing. If we then get a close below today and we get a further entire candle below this 23.90 tomorrow, then we have an opportunity to add to our high time frame short position. There's some possible scenarios that we're looking at over the next 2 to 3 days. And as I said, today's price action is pivotal, as are the next couple of days, and we're watching it very closely. All right, going on to liquidation charts to give us some idea of where the liquidity lies. And as I say, to quote Tom Cruise in that famous movie, show me the money. This is the 1 day time frame, and you'll see there's lots of longs piling in on 1 day's green candle, which is very unwise. And unfortunately, it's common for the retail traders to get all excited that we're going to break out, and this move here, which is still below the range high, is all of a sudden indicative that Ethereum is going to break out. Well, the market makers may well be rubbing their hands together at all this liquidity down here. And you see there is a big gap here where liquidity has been taken on either side. That allows for very rapid price moves because no liquidity has to be chewed through to get to either side of this gap for price to move and to then chew into this liquidity on either side. So this is a bit of a warning signal of what's coming in the last day. Let's have a look at the 7-day liquidation chart to see what's going on. And again, there is a lot of liquidity to the downside, and there's big spikes up here. Look at this fella, 23.20. We've got a lot of thick liquidity down here into the low 2200s that could get tagged. Now, our bottom of the range is 2131, and that liquidity does not really extend with any depth down there. So we may not get there straight away in one fell sweep. It may be a gradual process. Let's have a look at the 30-day and see what's down around that 2130. Once the page loads, and you'll see, obviously, over a 30-day period, there's a lot more down here, and it's quite thick as well compared to the upside. So I'm still saying that price could well continue to reject and come back down to this 2131 bottom of the range low, thus trapping lots and lots of these long positions, and particularly go back into the 1 day, these unwise retail longs that are piling in here and asking for trouble. So as I say again, pivotal the next few days. Now, looking at another chart that I use on TradingView, and we can see that there is no great liquidations up here on the chart that the chart's indicating, hey, we're topping out, we're going to get a reversal. So there's a bit of a contraindication to what I was just looking at before on the liquidation. So according to the perpetual support and resistance, these little blue stars here, we could continue to go more to the upside. Now, this tends to be, this parabolic move here often has legs, but you'll see it's just stopped out. This is the 1 hour chart in the last couple of hours. It's something that I'm watching. It's indicating that price could continue to the upside, particularly during the US session, where 3 hours into the Asian session and lots of nothing has happened, as has been common in the Asian session lately, especially with the dampener that China's putting on the Asian markets. But as I said, we could go to the upside. By this is indicating that it's a potential. And again, I come back to why the next few days are pivotal. We've got today, tomorrow, and the next day to work out which way things are likely to go. Another bit of good news, who doesn't like a green candle, is the ETH BTC chart. And you can see we've got several days, again on the daily, several days with which are worth of nice green candles. And you'll see it's above the 50 EMA. That's very nice. Now, it would be nice if this didn't appear to be a potential head and shoulders pattern. It would also be nice if we look here, we've got a range that's happening here, and that this here being a potential deviation above the range. So what we need to see is more green candles from ETH printing, just like we did here previously. Strong green candles with small wicks indicating that price is going to move back to the upside. So there is always potential for price to go both ways. Let's have a look at King Bitcoin now. And you'll see here, again, he's in this range. I won't mark it out so much, but you can see it clearly here, top and towards the bottom of the range. So, and it's just very similar to Ethereum, but this little deviation here. And so there is the potential for it to go both ways. So a lot of hovering about at the moment. But the one thing that I will mention with this price action, going back specifically to ETH, is the longer we stay constrained in, get rid of these indicators, the longer we stay constrained within a channel, the greater the chance of an explosive breakout. It is like a spring that's been tightened and tightened until all of a sudden it just lets go, all that potential energy lets go. And this is a classic behavior of price when you're under compression for such a long time. So it could go either way. My expectation is that because we rejected so clearly from that clear range high, and it was, you can see here 23.92 is the top of the price from yesterday. It's indicative that price could now reject further down into the bottom of the channel. Now, there are some macro factors coming along, such as the Denkun upgrade and the meeting to decide when further upgrades are going from the testnet to the mainnet on Ethereum. That is coming, and there's a lot of excitement over that. The Ethereum ETF is overblown, in my opinion, because Uncle Gary, who hates crypto, sees Ethereum as very different from Bitcoin, and there's no reason to say he's definitely going to approve that. We'll just put those aside at the moment, and let's look at the technical analysis, the price action, And as far as, in my opinion, we could easily continue to come down now, given that clear rejection. We need to see where today's price goes, its candle and its close, tomorrow's and the next day, to get a real idea of what is happening. So that is where we're at the moment. I will make further YouTube videos this week during the weekdays, and we'll see where we're going. But at the moment, it's a wait and see as to where the next significant move of Ethereum is going, but it is coming in the next few days. This is Old Bloke Crypto. Trade safely, not financial advice, never is. Please hit the subscribe buttons and the notification bell to be notified of future videos. Stay safe, as I said, with your trading. Talk to you tomorrow.